Good day, traders. Stacey Burke from Stacey Burke Trading, and today we're going to just go over the London breakout trading and a couple of key things that can help you, and these apply to the US session as well in terms of looking at order flow, then establishing where your potential buy and sell levels are, and then being able to identify potential areas to place your trades and how to place your stops. So again, with any of these setups, do your own due diligence, back test. I'm just using the pound today, but this applies to any of the pairs that could be trading strongly at the London Open. So obviously pound cross pairs, maybe the euro yen. Again, some of these other pairs may set up, the euro included, but again, you need to test these yourself. Obviously, when London opens, the pound tends to demonstrate a large amount of activity and potential trading ranges. So US Open, any of the markets could potentially move around those times, and each one has their own individual average true range for those sessions. But what we're going to talk about today, and I'm just going to condense this chart down. Again, if you've been following, you know the pink is Asia, the Asia Open, yellow is the London Open, and blue is the US Open. So what we're going to look for is, number one, we're going to wait 1 hour for trading to commence in that first hour. So on the iSessions indicator chart, I have the first bar presenting at 3 o'clock on my MetaTrader MetaTrader platform. So 3 a.m. the pink box starts, and then at 3:55 what I will do is I will place a vertical bar if I was to trade Asia. And what I want to look for, I'll just blow this up a bit. What we want to look for is, okay, that's our first hour. So do we have a potential level of resistance or breakout or selling? And what we see here, we'll use our line. So what we saw here is a breakout from a horizontal channel occur. Now what we want to identify is other areas of where there may be stops or orders placed above or below that area. Now the next component is I want to be looking at the direction of the EMA. Sorry, we'll just do this again. So we've got our areas of potential support and resistance. We saw a channel that the market's broken out from, and again, so what we're looking for is an indication of order flow in that first hour. So we've got a bias of selling coming in. The market has made 3 legs back up, and then if we were to position ourselves short, we would be looking to enter the market on a bear direction. You could also sell up somewhere in this area with your stop placed above somewhere up here or here, depending on how much risk you want to carry. As soon as the market breaks that low, you must go to break even. When a market goes out of balance and into a new higher low, you must go to break even. Our next potential target is the level where the market formed a low heading into the Asian Open. It's sort of an all consolidation inside of this big bearish move down, but we would just position ourselves. Some people may want to take profit at that level. Other traders may look to stay in this trade and see evidence of two-sided trading occur around that level. So again, first hour, we'll go on to the London Open now. We'll just go over that again. Okay. Just get rid of this tool. So if we go back to the London Open, sorry about that. So again, our first bar, so we have some order flow going into the London Open that's bearish. Right off the bat, we come back and our first candle for London starts at we're having a bit of trouble here. There we go. Starts at 9 a.m. on the MetaTrader charts, which is 2 a.m. New York time. So we've got our 2 a.m. candle. Now we're going to come back and we're going to put our vertical line at 955. Okay, so now what we're looking for is we've got order flow. Okay, we've got a breakout from bearish drive into the open. And what we are looking for now is we want to be on the side of the moving average. And in this particular instance, we've got our first hour's trading range. So we either want to be buying low in line with the moving average on a pullback somewhere in here, or resuming back in when the market turns bullish. So there's 2 points of entry. And again, if you enter in on that candle, your stop would be somewhere down here. If you enter in on the bear candle, your entry or your stop may be somewhere down below here. So we're looking at a potential measured move where the market did indeed hit that. And between 2 a.m. and 5 a.m. New York time, look for a high or low for this session to potentially develop, which again we see that happen here. Now we'll follow that in same method into the New York session. So I start the New York charts at 1500 hours, and at 1555 we put a vertical line. So now we want to address where we see potential resistance or support. So the market has formed 1, 2, 3 highs, but it also had bearish order flow prior to the going into the US market open. So we are looking for some indication of where the market may either have driven in one direction or the other. So we see that evidence where we saw it towards the end of the first few hours of Europe open. But you're looking at two things, either selling high with a stop somewhere up in here, or going back in line with the moving average, which at this point you could potentially say is a range until we see otherwise. So the market gave traders who wanted to scalp an opportunity to scalp somewhere down to the lows. Traders may have actually wanted to short it again for a quick scalp again, and then not necessarily gotten anywhere with that. This is all inside of this range. Traders who would have looked to put a short limit order on bull stops. So where we see the market drive up, we've clearly got a down market happening here with order flow. They may have looked to enter the market on a break of the bull candle, which is where we know bull stops would have been placed, and the stop would go one tick above the bull bar, and traders were picked up. Now that was obviously possibly an announcement, but they were able to obviously capitalize on that movement south, and then we see 1, 2, 3 drives to new lows before the market started to demonstrate sideways price action. So again, first hour of trade, draw a vertical line. Look for evidence of order flow, bullish or bearish, just prior to the open. Has there been any other levels violated or broken? Draw your support and resistance. Look where you can place a 1-bar stop back in line with the moving average. And again, when you go to new highs or new lows, you must go to break even or take profit, because that is the most vulnerable point for the trade. Look for evidence of strong momentum, especially after the market has opened and given a direction of bias. So hopefully you got some value out of that video today, traders. Keep it simple. Know the pairs that you're trading, especially the London pairs at London Open, but other pairs into the US Open. Know the types of ranges. Look at the average true range for the day. Look for evidence of how far they've moved already. And yeah, hopefully that helps, traders. Keep it simple. As you notice, there's not a lot on that chart. It's fairly price action based. Keep it simple, stay disciplined, stay focused, and may the markets go with you. Thanks, traders, and have a great day.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, The 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.